Welcome everybody. Welcome to Market Profile Bulletin for Nifty 2nd March 2017 and potential auction paths. Myself Dean. You can get in touch with me on Twitter or visit my website getthattradingis.in. Softwares used for today's analysis are Bell Market Profile and Bell Order Flow. For more details on the softwares, please visit belltpo.com. Let me go through the disclaimer first. Information shared here is not a trading recommendation and we are not a business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decision. So let's go to charts. So this is the development for Nifty today, and as you can see, it was a nice elongated profile, a bit of a value forming higher, but we'll go through all the details. You will come to know what exactly was happening today. So start with, we had this particular reference marked yesterday and we had a potential failed auction going into the close yesterday, but there were a few problems with yesterday's failed auction. One, as I think Rahul pointed out, that the volume point of control was clearly higher than the price point of control, and I had shared this particular bit with you yesterday. And second was, this was a clean P profile, but it was happening just below this particular point of reference. It's a very visual point of reference, so many people are there who are looking at this reference and they try to short just below the reference or around it. So these were a few problems. And why they were problems? Because anybody who was trying to sell early on in the day were forced to cover going into the close, and again the prices came back and closed lower. But this whole if you look at the whole development, and if you just remove this stem or ignore this stem, what you can see is a nice bell kind of a shape just below an important reference. And more often than not, this kind of a development is synonymous with absorption. What I mean by that is, looking at this reference, sellers came in and smart money was continuously absorbing from these sellers. Had these sellers being of the smart variety or strong sellers, higher time frame sellers, we would have immediately tested the open, repaired the low and went down, but that did not happen. So what happened was, actually some people were absorbing the selling happening yesterday, and because of that action we got a gap up to. And what happened after that? Instead of I had pointed out in one of the potential auction paths that if we directly open higher, then we might put every seller in this region under pressure, and that would take prices much higher. But as it turned out that all these sellers who were selling were forced to cover by the end of the day, and smart money had already bought here. And when we opened higher, smart money was looking for a potential short covering to push the prices higher, but that did not happen because most of the shorts are already out of the market. And this kind of a development happened, which we call as open auction out of the range. I shared this particular bit on Slack, and what it meant was that even though initial price activity was pretty congested and in a small range, there was a possibility of a big move going into the day later in the day, because opening outside the range in itself suggests that the market is imbalanced, and that is exactly what happened. what happens is that for first 3-4 periods we just consolidate, then we try to break out. Now had the bears had strength, they would have immediately taken off, but this particular value formation told us that bulls were not very strong, the buyers were not very strong, or even if they were strong in opening the price gap up, opposite side the sellers were using these higher prices to distribute. So any buyer strength that was displayed in the morning was neutralized by the bears, by the sellers. And what happens after that? Let me just clear everything. What happens after that is this nice value develops, and then just to push out any weak and early sellers out of the market, we get this particular spike up, and then this fails, and then we tank. So today was a particularly nice day for me because I could manage a short. Unfortunately, I was late to the office today, so I missed this particular point. But then in my Slack update, you saw that when the price was hovering around this range, I said that we are accepting at this range, and that is not good. Even there was a nice one time framing down going on, so all that suggested that we might get continuation to the lower side today. And once this particular reference was gone, this one here, which is very close to the price point of control, once these references provide some support, people were coming in and buying in this range, hoping that this particular value will again defend the prices, the buyers will again step up, but they did not. And once we broke those levels, prices just collapsed. So that is Nifty for you today. Now this particular day as a whole, if you see, is a very elongated day, and it has completely engulfed the prior day. So this might classify as a nice bearish engulfing. Volumes have increased, and that all points that the bears, at least for the time being, are in control of the auction. So what do we expect going forward? Naturally, for such an elongated day, we would hope for some continuation, and actually continuation is the expected behavior. Not getting any continuation would again warn us that this might not be a fresh selling attempt. If this is a fresh selling attempt, we should immediately get some continuation lows. And where are we expecting the auction to go? Where this is one of the levels. Why this is one of the levels? Because 2 days of activity, this particular blue line is the breakout line. So 2 days of activity hovering around that previous top or swing high, as you call it, and then closing right at highs, putting any seller in this range under pressure. Next day opening higher and consolidating, absorbing any more supply, but finally going higher. So this is an area of absorption or reaccumulation. So this area will definitely provide some support. Going below that, of course, will be very bearish and will then test lower references. One of that is this particular breakout level, and even below that is this again this point of control, sort of a value developing in this range. So these buyers may try to defend their positions, but if they don't defend and they give up totally, what might happen if these buyers have exited somewhere higher. Let me just clear everything. If these buyers have exited at these higher prices, there may not be enough power left to defend when prices reaches this level again. So that we have to monitor tomorrow, and that is what happened here. First time, second time, third time prices came, these guys tried to defend, but once they gave up, price just tanked. Now we are in this area, but does not look, we almost completely traversed it, closed inside it. So I mean, this does not look very promising. So we are likely to, test buyer strength in these regions now, and let's see how buyers defend. But that is the expected behavior, and this is a very key concept in market profile: expected and unexpected behavior. Expected behavior tomorrow is this for sure, going down and testing lower references. But not getting this behavior should immediately alert us to the presence of an opposing force. In this case, the auction is going down, so the opposing force will be buyers. So we need to monitor for continuation tomorrow. And if say we open lower, even consolidate here is fine, as long as we are below, this spike low, we are fine. If we enter the spike low, then there is a possibility that we might retrace this whole move, because one thing that prompts me to say this is these kind of, distributions happening, multiple distributions, not pretty evident on the price chart, but on volume chart they are pretty evident. And such kind of activity suggests that the players were forced to exit their positions. Now entering back inside this, we might test or repair all these anomalies. But if we could manage to stay below it or straight away find continuation lower, then there is a possibility of testing lower references. So lower references are 8870 is this first one. Let me get this first one is 8870. Second one, this is the breakout level 8845. 8835 is another important level, and 8800 is the destination trade which I am looking at. So let's see how market pans up tomorrow. Now let's go to Bank Nifty charts. Bank Nifty, same story. We were looking at these two distributions for a while. Yesterday, these sellers defended the seller selling in this zone again came and tried to defend that level. Today we opened higher, a level which was being defended by the bears second time, and opening higher should have given us a nice continuation higher, but that we did not get. It meant that these sellers were again coming in here. They distributed the whole day, and late in the day we got a nice spike down. So what are the references then? The references again are this level is important. This is the point of control, volume point of control for this combined profile. Going below this again is an important reference. This blue is the breakout level. So all these three are important, but Bank Nifty, is pretty famous for wide ranging days and wide moves. So we need to go some more references lower. And if you, make a composite profile from 10th February to 16th, you get a nice bell curve. This was nice accumulation, and we moved higher since then. And this is the area somewhere around 20285 to 20280 kind of level is which is likely to be tested today. So finding acceptance below this will definitely put bulls under pressure. But for us, I mean, opening lower, straight away move down and test this level, or again find acceptance below the spike is fine. Entering the spike, again we have a possibility of repairing this and these, all these anomalies on the today's chart. It might be repaired. So might not happen tomorrow itself, because this momentum is pretty strong. So any attempt to move up will get sold into. Momentum sellers will accumulate their shorts at this disadvantageous location, and if the smart money does not help them to move lower, there is a possibility that we start moving higher again. Maybe repair these anomalies and again fall. That is a possibility. So let's see how tomorrow fares up. Order flow charts, again I shared one in the morning. I would like to revisit that. Where are my order flow charts? I hope this is the one. Yes. What happened in the morning update on Slack was this one. I found that there were some deep red prints, you know, clustered around the lows. This bar going lower, finding sellers, but again closing at near the highs. All this was a kind of absorption activity. We then moved again higher, and then we failed. So here we have a spike kind of activity because lot of green prints and no continuation higher. These green prints should have resulted in markets moving higher, but what we get instead is again stuck buyers at the top and prices closing off the lows. That was one of the signs. If you then go to lower time frame charts, you would definitely find some nice shorting opportunities. So I could not get this one because this was the early morning spike. I came out to the office late, so I had to try for, because see, once this reference, once this particular pattern was missed, the destination trade was this reference. Let me show you what this reference was on a Nifty chart. Okay, it was this reference which I had marked in the in my yesterday's video log. This reference and this reference. So these two were the target reference for any failure in this range, and they were achieved. So once these two references were tagged, what I was looking for was buyers showing up and taking the prices higher. But if you look here, what happens is that you do get some kind of a bullish delta divergence here, but then no follow through. I mean, this bar is up because of this bullish divergence, and if this divergence is managing only one up bar, second is an inside bar again, what it means that the attempt to move higher did not generate any results. After this particular kind of action, bulls should have taken prices higher, but they could not even manage to go above the VWAP. So I'm not using it as a reference, it's just showing here, so I'm just mentioning it. So that was the reason which prompted me that okay, this is not going anywhere. I would like to show you the 3-minute order flow chart because there was the exact pattern which I used to enter my trade. Somebody asked me when I entered the Bank Nifty trade, but I did not trade Bank Nifty. I traded Nifty only. And where was that? It was somewhere here. Yes, here. This was that pullback coming into the VWAP, and you can see delta divergences on these two bars for sure. But what I did not sell here, I was actually looking for a test which I did not get, but I got this bar. This is a very interesting bar, a bar which opened at the low and closed at the high, filled with green prints, and see what the next bar does. Nothing. It did nothing. It did not even go above the high of that bar. Then we again come down and watch this bar. Now this is a bit of a what you can say cognitive dissonance, which Dalton says. This is a narrow range bar compared to last two bars, which were also very narrow in range. This is an up bar, but the volume is not lower than the previous two bars. So this is not a classic no demand kind of a bar. But why I use this bar to generate my short, and why I use this was there was huge volume. I mean, compared to last 1, 2, 3, 4, 5 bars, the volume was highest. The range was the lowest. So what it suggested was buyers were trying to come in here, looking at the strength in this bar probably, but they could not manage higher prices. If buyers were coming in so strong, why the prices did not move higher? That was the question which I asked, and then I thought that okay, buyers are definitely coming in, but they are matched by equal number of passive sellers, and that is what prompted me to take that shot. Luckily, I was immediately rewarded, but that does not happen always. But yes, I did get that trade right. Closed it out into the close somewhere. Yeah, that was the reference. So once I don't think this was the reference. Let me show you where I close my trade. Since I trade options, I do not track the Nifty levels. Yeah. So this was the level which I was looking for, which was my target, and I shorted somewhere around here. So I took off some of it here, and then the rest of it, I mean, this was a pure bonus. This volume point of control I was looking for, and price point of control. So somewhere in this region, when this sharp spike was happening, I just got out of my position. Now you might say that this might lead to continuation lower, but again, I pointed out these kind of multiple distributions does not, prevent me to carry my shorts. I might lose on some points, but that is how I manage my risk reward and my sanity. Not suggesting you also do that, but that is how I trade. Everybody has their own style. All I can do is just help you out as much as I can, and help you find your way of trading and your particular personality type which suits that kind of trading. So I think that is all I have today. Let's see how markets pan out tomorrow. uh, Thank you for listening.